Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone 1 minute past midday here, making it just gone 11 a.m. UTC. Big shout out to everybody that's joining the stream live today, and of course to everybody that's going to watch this on recording. So, I hope everybody had a nice weekend, had a good week last week. Took some time off over the weekend to get some family time in there. So, hope you guys were outside touching some grass as well. So today we're going to take a quick look at Bitcoin, right? So I want to keep the session a little bit shorter today, kind of take a look at what our expectations are for the week ahead. We're going to take a little look at the equity markets as well, focusing really on ES. We'll take a little look at ETH as well. And I want to show you guys the current kind of data that we've got coming through on Kingfisher as well to see where those key liquidations are. Waxshar, Craig, good morning, guys. Great to see you both. So let me just make this out a little bit bigger. So I had the pleasure of doing the Bird Nest Sunday Bitcoin report, which I really like to do actually, because I love to sit down at the charts on a Sunday evening, take stock of kind of what's played out over the weekend with crypto. Obviously, traditional markets aren't open over the weekend, right? But it's still really key to keep up to date with certain news drivers, right? Because that can have an effect when the markets open on Monday. Hey, Nit, how you doing, buddy? So, yeah, look, don't want to kind of drag on really, not going to really spend too much time going over the basics today, guys, but if you do have any questions or anything, then do just drop them in the chat and we'll look to cover them off as we go. If we make a little bit of time at the end, I'm going to do a stream this week based on what we chatted about last Wednesday, which was entry techniques. So maybe I'll show you guys a couple of things on that later as well. But if you've got anything you want me to particularly take a look at today or anything you want to discuss off the back of this, please do let me know. But try and keep this one a little bit punchier for you guys. So I'm going to start in here on the daily, but I have got this weekly fair value gap here right now. I don't tend to kind of really leave these on the charts. And the only reason for that is because it just, when you get down on the lower time frames, it just swamps the entire page with a load of grey, all right? But basically, what I've got laid out here, which was exactly that was in the report last night, is this range that we can see that goes from the low here up to the high here. Yeah. This is the kind of recent price leg. So with price being contained in this range, using our theory or ICT's theory and my inception of that, of premium and discount, is that if we turn this into our premium discount range, yeah, then longs are favoured from the bottom 50%, yeah, and shorts are favoured from the top 50%. So this played in to what we had as a very, very successful trading week last week, with, hit rates approaching 80%. And, some of us, myself included, were, doing sort of around about 7 to 11 R, I think, per team member last week. So it was a really, really good week. And actually a lot of the principles of that were kind of based in here in terms of looking at premium and discount. Anshuman, that's fantastic, buddy. Following for a while. Great to have you on the stream, mate. Lots and lots of value over at the Bird Nest. It's great to just have a community of like-minded traders, professional traders, full-time traders. Because we've all been on a lot of crazy journeys to get where we are today. Now the idea is that as a collective, obviously led by Crypto Burb, we kind of give back to that community. And speaking of which, my absolute brother in the nest, Razor Razoon, my man, how you doing, buddy? Awesome to see you on the stream. So premium discount, in terms of looking at this current price leg here, or this kind of trading range, if you like, we're still up in premium, right? Which actually means that we're favouring short setups. Now, time frame is everything in terms of context, right? So while we're looking at this on a daily scale, doesn't mean that I wouldn't consider long setups for this. But this helps really kind of play into where our objectives are. So let me just move this back to sort of a bit of a less offensive range. So while we're up here, the same principles are being applied on the different time frames as we're doing our top-down analysis, all right? So one thing I just do want to show you guys, which I think is a really, really key level, which I shared last week, which is a big reason I thought we were going to come into resistance around this area, is I flick this onto a monthly chart now. And this, for me, is just so clean, right? We can see here the high that was set all the way back in December 2020, right? These are month-long candles, right? we can see how that was capping the market. Price came above, had this expansion higher, support, support, support. Price then basically gained acceptance at this level, meaning that we then target liquidity higher up, which in this case were these highs. Now we can see when price broke down again in May 2022, this line again gave us support. We couldn't close beneath that. But since we had that big flush down here, and look at how bearish that candle is, right? Look at the volume in the body of that candle. Price then hadn't retested this at this point. So I expected some kind of initial reaction here, right? And on this kind of scale, price getting above, closing and holding above this level, yeah. So for those of you that want to know, that's 29,357. And that's on Bybit, all right? So it will change slightly differently on different exchanges. But to get and hold above this level here, I think then means that we attack the liquidity up here. We've got these inefficiencies to fill as well as we go up. But while price is kind of being held under this level, for me, that is, plays very heavily into our kind of bearish bias. Now, again, going back to time frames, that's a monthly chart. So now we're dropping down here onto our daily chart. We're saying to ourselves, okay, what other factors have we got? I've got drawn onto here this green line, all right, which for me, I'll show you on the weekly, is a key kind of, whether you want to call it a pivot point or a point of interest. For me, it was this high that was capping the market, right? July 22 high. Why is that capping the market? Because if we look at the price action here, it's very, very clean. We're just not getting closes above. Rejection, rejection, rejection. Price can't get confirmation above there. We get the swing failure pattern here and price sells off. Where to? To liquidity ultimately resting under here. Now, when we took that liquidity here, and you see the downside wicks here start to build and we get this expansion higher, we once again found resistance here, all right? However, this time what was interesting is we found resistance there, immediately sold off, then showed strength again to come back into this level. Now, the long upside wicks here was showing that price was really failing to get acceptance above there. But then what happened was what you see happen so often, and obviously time and price is fractal. Sorry, so you see this a lot more on the lower time frames. But how many times have you sat there and asked yourself and said, okay, I wanted to go long here. Yeah, imagine this is a 10-minute chart, 5-minute chart, an hourly chart. Yeah. And you think, okay, we've got the breakout above here. Yeah. Stop loss is placed under here. You're thinking this thing's going up from here only for price to run the stops below. See this long downside wick here, took out all the liquidity below these lows, and then we had that big expansion move higher. So while we're considering that, this move up here, again, very, very similar in terms of when we're looking at breaking down here. When we get these big expansive moves with high volume, normally the following candles after that aren't going to be as big, right? So SZ says something, I know I quote it a lot and part of many of his amazing sayings and teachings, but small-bodied candles lead to big-bodied candles. And in a lot of ways, it's often the same in the opposite. Look, this big bearish expansion here, lots of volume, lots of small-bodied candles, yeah? We then get this expansion here. We then get another day here. But again, that half of the volume of this candle here, then price starts to consolidate before it makes its bigger moves. So in terms of what we're looking for here, and let me just pop back onto a daily to show you what else we've got marked out, is I've got this order block, right, which is from this candle here. We had this expansion afterwards, leaving this inefficiency, yeah, meaning that price came up. And now we've got this fair value gap here, which is one that we've targeted. We've come back down into this here. The reason it's not on the chart at the moment, and it was last week, is again, because once we're in there, once we start to move on to the lower time frames, it really can start cluttering up the chart. So these are here really to just highlight the key areas of where price could be drawn. So on a daily scale, my thought process so far is this: reclaim above this level, yeah, I think is bullish. I think we then make a run on the range higher. We've got a lot of liquidity resting above here, right? So we've got all of these stops resting here, and ultimately liquidity resting above the highs there. So if price does come up, yeah, I do think that this is going to be a really, really tricky level for it to overcome, because we could quite easily see price run this level here, swing fail these highs, and then come back down below. However, if it did do that, I think it gives us a really, really good indication of weakness, and then I'd be looking for shorts on the retest of this level here. However, what I personally think is more likely is that sort of medium term is that we do come down and we kind of test this area down here. It's in the lower half of our range, meaning that price often comes down to this area where you find your more high probability long setups. We've got inefficiencies sat in terms of fair value gaps here. Obviously, the one that we've got marked out here, we've got this order block, which is drawing price lower, and that green line representing that key level that we're looking for support, right? And when we looked at that on the higher time frame, right, the interesting thing to note is that we haven't come back and retested this yet, right? Not on a weekly scale. A daily scale, look, how we've come above it, and then look how perfectly the bodies of these candles. So we had our break above, price really tried to get pushed back down under this level. The bears couldn't manage to get them under it, to close under it. We then retested it here, and look how the bodies just perfectly respect that, right? We then got the bullish engulfing candle here that then led to the expansion. So for price to purge down here, I always try and tell a story with price, and it seems to me like we've got a lot of confidence when we're looking at that, right? So 1 second while I pour my tea. Lovely. Right, so I like looking at things in terms of a story, right? So I'm telling myself, okay, what reasons do I have for price to go up here? Well, if price is going up from here on this scale, it's to attack the liquidity above these highs, right? Or at least the liquidity above this high here, which we're going to look at on a lower time frame. Now, we've got liquidity resting here, the interim swing high and interim swing lows down there. So when price gets to either of these levels, again, I put this out last night as well, that's where I'm interested. I'm also interested at this red line here, which we're going to look, which for me is the kind of lower time frame pivot area, or the area of support and resistance flip that I'm really interested to see. I think if we start retesting this and holding below, I think we sell off further. However, I think if we reclaim it, don't show too much of a negative reaction when we sweep this higher. On the lower time frames, it gives us some nice day trades into this level up higher, all right? So that's where we are, or certainly where I am on the weekly at the moment. Let's just take a look at the 4 hour, because I just wanted to share this and then also share with you guys the B Pro trailer on this as well. So this is our in-house indicator. It's basically a standalone trading device. It's what Burb has built over a number of years, fitted around his strategy, but you can use it for tons of things. I use it for divergences, but most recently I've been doing some really, really interesting work with this trailer, right? So this is an incredible piece of kit. So if you need some kind of indication in terms of your trend, then this is excellent, because look, when this candle closed below here, look how long the trailer kept us in bearish trades. It basically caught 80% of this down move, So I'm using this typically on an hourly scale for my trading, because I'm executing on a 5 minute. So when I'm looking at that triple screen system, however, I wanted to share this with you guys because I know that a lot of you are higher time frame traders, all right? So I think it is a really, really good bit of kit. So I think, if it helps you in any way, then it can be insightful. And one of the other main reasons I'm sharing it at the moment is we can see that we're coming back to engage with it here, Now, if you notice with this, quite often, when you lose the B Pro trailer, when price comes back to that area, you see this reaction here, we then got this sell-off. We ultimately found strength in this move that led us then moving into a bullish mode here, which allowed us to play longs to attack these highs, right? But we got that retest and then we got that reaction, Now, we can see here when we lost the trailer down here, we lost it here, retested it here and got that reaction to the downside. So at the moment, I think price is coming into a really, really interesting zone. And the B Pro just kind of helps keep our eye on the higher time frame, all right? So in terms of this just shows our range. We'll look at this a little bit clearer on the hourly as well, right? But you can see here on the 4 hour, this low that was set here was really interesting to me, because when we look at the interactions that we had this big move, this big expansion through it, retested it, sold off, retested it again, swing failed, sold off again. You'll notice I've said that a few times, right? So let me give you the context behind it. So the phrase is impulse move or energetic move with displacement, leaving these gaps through a key level, to me indicates that bigger players have stepped into this move, or that there's certainly the impetus behind that move to really kind of have some significance about it. We also don't get that immediate V-shaped recovery, right? So like, for example, when we ran this level, you notice how you immediately kind of come back down. for me, that's a sign that you're getting a very quick, very energetic reaction, meaning that price is probably going to struggle to get acceptance above there. But the phrase that I've been saying is impulse move through a level, retesting it, coming back, retesting it again, swing fail, meaning we're taking out the prior swing high, but then ultimately breaking down. And the last part of that is we're then running to liquidity. All right. Now, the reason that I've kind of mentioned that again is for a good reason, right? Because you often see patterns like that play out, and it's a big part of how I trade the lower time frames. So as we move down onto the lower time frames in a minute, that will hopefully give a little bit of context in terms of the patterns we're going to look for. But in terms of where we are at the moment, let me just pop this onto the hourly. My focus here, as you can see by the alerts that I've got set on Bitcoin, which you can see by these little golden arrows here, here, and here, are this level, right? Which is what we just discussed back there. You can see the key interactions that price has had with this. All right, even going back here onto an hourly scale, look what we got. We lose this level, retest it, sell off, retest it, sell off to liquidity. What happens again when we come above this level? Yeah, once more, big impulse move up here. I mean, this one really didn't give you much opportunity to get involved. We then got rejected at our key resistance level here. But look what happened. Price came down and found support at this level. It couldn't close below it. These downside wicks showing us that buyers stepped in. We've then come back up to here and basically found ourselves ranging within this area, right? We can see here, price runs this level again, kind of gets stuck around here, right? But then ultimately, what does it do? Pops its head back up in a move really, really, really typical of what we see in the markets, which is convincing people to buy into this. Yeah, breakout play, key level here we can see because support flipped it. All of this is resistance. People really, really, really wanting to jump on board. We get that pop above, people FOMO in, and what it ultimately serves to do is trigger the stop losses up here, right, of the people that were short. So it creates buy orders. Breakout traders go long here, creating more buy orders. So, you know, basically within here, what you've got is this massive pile of buy orders, right, of liquidity, meaning that people are willing to go long. They're opening their positions and they're saying, come on, I want to go long. So for every buyer, you have to have a seller, and for every seller, you have to have a buyer. So big accounts can target these liquidity pools, yeah? And they're thinking, well, if my plan is to short this market, what I want to do with the epic size that they've got, because they have to be concerned about slippage, getting their positions filled, the best thing that they can do is convince the whole market or the majority of the market to go in one direction. And then what that allows to do is that creates all of the orders they need to fill for them to fill those buy orders with their sells. And then look how quickly you get this breakdown, ultimately being held once again by our kind of local support resistance level here. So now we've got that similar situation here, deviated this, broke out above. Where do we target? Liquidity above these highs again. So that's significant because we're now kind of coming back to this level, yeah? And we can see the recency of this action. We broke down, retested it. Once again, what do we get? Deviation, takes out these highs, underneath, retest, yeah, comes down for liquidity lower. So for me, I'm on the sidelines here until we interact with this, right? Or if we start breaking down from here, I want to see what price does if it comes into these lows, yeah? Because I'm not really sure that I'm comfortable shorting here. I'm just not sure it's the right place to short because I could still see something like this, right? Price comes down into here, bearing in mind the lower 50% again of this range, meaning we're now down in discount, favoring long setups, right? Convince lots of people to go short, yeah? Well, like we set up here, the idea of creating to generate this liquidity, right? So people come down here, triggers stop losses, other people go short, fills the buy orders of bigger players who can come up and then look to offload liquidity at much cleaner levels. Yeah. What I would call clear and obvious levels, which would be something like this. All right. So at the moment, I've got my levels marked out on Bitcoin. I know where I'm targeting. Price interacts with here, here, or here. Then I'm interested. I'm also going to be monitoring if we start to run these lows. down here. All right, guys. Did anybody have any questions on that? Craig, sorry, mate, I didn't see your ones in there. Do you ever use VPVR volume profile? Yeah, to see where the grey amount of liquidity is. So, talking of liquidity, let me pop on the VPVR for you so I can discuss what Craig is talking about here. Right, let me just pop your question up there, Craig, because it is a very good one. And some people might not be aware of what this is or how to use it. So this is your visible range, right? Based on volume. So what you'll notice that it's doing is calculating for everything that's in the screen. So let's take it to a 4 hour for a moment and get a little bit more data in there. You can expand this out as well so that it can cover kind of a wider area. I typically have it set to a slightly tighter zone when I'm day trading, right? But the key thing to understand here is with what you've got on the page, yeah, because as you zoom out and zoom in, these will change. This thick grey line here is your point of control. That's showing the highest volume area. Now, what's interesting about this is you see where you get these voids, yeah? Think of this almost like a kind of support and resistance, or where the most action and price action has taken place, yeah? So if we look at the second highest node, which is here, if we just put this on the centerpiece here, now if we follow this back, look how this is acting almost like support resistance, right? But there's a lot of price action here. And this is almost kind of showing, the market pivot points, for want of a better term, which are known as the points of control, POCs, yeah? So a lot of people, when you get naked ones of these, meaning they haven't been tapped, they can often act as magnets. Now, the way that I use it a little bit more is I will overlay this occasionally, Craig, and I'm looking more for these kind of voids, and I'm saying, okay, well, if my theory here, yeah, is if this is our point of control, right, and this is also where that key level is for me, and the liquidity level above there, where that helps play into my confluence is to say, okay, well, all of a sudden, this adds a little bit of extra confluence here that if we come up and reject at this level and come back beneath it, yeah, then I'm favoring shorts, all right? However, if we get above this, yeah, we really fail to start going below it. On the lower time frames, we get into that nice bullish structure. Then it gives us the confidence to then start longing in on a day trading terms to our next set of key levels. So yeah, it is something that I use, but actually, one of your guides for volume is our man who's popped on the stream earlier with us is Razoon, and also Bast as well. So you got to follow these guys. That's Razoon's Twitter handle. I believe Bast's is Bast Trader, or it might be Bast_Trader, but you can check them out on Twitter as well, or just drop me a message and I'll link you guys in. However, as we were just talking about volume here, this kind of, and in terms of volume with liquidity, this brings me on to a really, really interesting next point. Let me just get rid of this for a moment so it's cleaned it up. And that's Kingfisher, right? Now, no partnership, no affiliation, just the people very, very kindly. We've been talking recently and they reached out and they've given myself and the team some access to their platform. So I found it really, really interesting. You're very welcome, Craig. And this is the main thing here, right? This is your liquidity map looking at where the highest leveraged stop losses are, all right? Now, this here represents exactly the same. Now, let me just refresh it quickly and make sure we've got the most recent data. And then I'm going to make that a bit bigger for you guys, all right? So what's really interesting here is that these are the liquidation clusters of higher leveraged liquidity, right? So when we have these really big spikes, what we're looking for here is we're looking for imbalance. We're looking for one side to be outweighing the other. And you notice at the moment, you see these lines, the pink lines? Yeah? You see how they're kind of roughly both of these bodies, almost like when you're looking at an order book. You see how they're fairly level, meaning that there's a cluster of stops here and a cluster of stops here. Now, obviously, these stops on this side are for people that have opened long positions, and these are their stop losses under certain lows or key areas. These are people that have opened short positions, and these are their stop losses higher. Now, we can see as we kind of run this along, right? Just move that back so it's just a little bit smaller so you can see the numbers at the bottom. Obviously, the price is going up here, meaning these are people that have been short from higher up. Now, what's interesting here is price, which is this dotted green line, is slowly but surely making its way through these liquidity clusters higher up, meaning that maybe once it's cleared these, which is going to be roughly 27,648. Let's have a look where we are. Cool. So literally between where we are here and this red line, right? There's a big cluster of liquidity there. So could it be again something pointing into our theory that says, let's have a look and roughly put that line in 27, so 648, wasn't it? 27. Roughly there, right? Now, notice again how interesting that is, right? That level, those liquidity, because people are putting their stop losses, above this level. So if we come up and we run that and we exhaust the liquidity, yeah, that's resting here, all of a sudden, if that then skews and this area here is much bigger than what's residing in here, I would use that to play into the theory that price is potentially currently running these stops. Maybe we get this spike up to here. Maybe we get it slightly higher to kind of take out the stops above here. But then if we get that and then price comes and breaks down here, then this is where we really get some nice high probability setups, in my opinion. We've taken out liquidity. The high, the low, that swept the high gets closed below in this move. We get that retest of that level and then price sells off. Yeah. Ultimately, I think that's the kind of thing that I'm certainly going to be looking for. And then the far side of that is if we start to establish price action above here on the lower time frames, we don't look like we're going to get that flush, then we can play some long setups in day trading perspectives into liquidity resting above that level, or these levels here, sorry, and ultimately this one up here. Whack. Hi, mate. It's great to see how this support resistance levels also match up. Yeah, they do. They're very, very often. In fact, Bast, who I was talking about earlier, uses volume as support and resistance. He's got an entire and incredibly successful trading strategy where all of his support and resistance levels are all based on volume. It makes sense, right? Because people are opening and closing majority of their positions around these key levels. So it can add a really, really nice bit of confluence to kind of put that over the top. Now, did anybody have any more questions on that? Was there anything else anybody wanted me to kind of take a look at there before we move on? I wanted to just take a very quick look at ETH as well. And then that kind of really plays in a little bit with our kind of altcoin thinking. And then just to kind of finish up, we can take a quick look at ES and see what the DXY is doing as well. So are we all good on Bitcoin, guys? Yeah? Yeah, Anik, if we've got a couple of minutes at the end, mate, I'll take a look at OP for you. And if not, we'll cover it on our Alt Request Wednesday. So let's take a look at ETH. By the way, guys, on Wednesdays as well, it's not all about alts. We trade in traditional markets, so you can look and discuss indices as well. I'm happy to take a look at those, things like the S&P 500, but also currencies as well, right? So anything on the FX scale. So let me get rid of some of this data. Beautiful. Right, nice, clean chart then. So let's pop on our daily first, get our kind of high time frame view. And this is something actually, I don't know if anybody caught any of this, but Twitter last week, we shared a lot of trades. Like I say, we had a really, really good trading week with my brothers and sisters over at the Nest. There are a few really interesting charts, but one of the questions I was getting was about high time frame bias, yeah, and how that kind of plays in. Now, like I said, I'm a very simple creature. So for me, I'm looking for dealing ranges. I'm looking to keep things as simple as possible. And, liquidity really is the thing that interests me the most. Running highs, running lows, to give that some context. Even in this short area here, we can see we ran some key highs here. Yeah, this swing higher. We ultimately got this deviation and sold off lower. Where were the targets? Well, that was target 1. yeah, with a secondary target in here. So now if we expect to go lower, bearing in mind that this move here swing failed this, so we took out this low in that process as well, and these lows. So all of that liquidity got taken there. So I do expect some kind of bullish reaction here, maybe up into this high. When we're looking at this on a daily scale, why that high? Because that's our next, interim swing high here. So maybe price pushes up for more liquidity there. If we get acceptance above that level, I think we can move up further. And actually, if we start breaking down below this level, considering that we've had those big swing fails, I think then ultimately we're going to come down and this would be the first target resting there. So that's what I'd be looking at in terms of that. So in my mind, I'm saying to myself here, okay, maybe we do squeeze a bit higher here. Yeah, if I just clean this up a little bit as we move down to our lower time frames, we can get a bit of a closer look. But you see this candle here, for me, this tells you so much. Yeah, the real long downside wick, leaving this small body at the top, very similar to like a pin bar candle or a hammer candle, although you'd see slightly less wick at the top. For me, it's showing that these long wicks are showing absorption, right? And that means that buyers are stepping in here. Whether this relief rally is temporary before more downside, no problem. Obviously, in terms of structure, we're bearish, so we have to keep that in mind. But in terms of liquidity, running these lows here, I think price could be squeezing higher to find some liquidity further above. For those people that were smart enough to be long down here, to offload their positions here or here, all right? So let's pop this down onto a 4-hour. Whack. Have to thank Bass Trader for helping me out with understanding support resistance levels via volume. Yeah, absolutely. Guys, do go and check out Bast stuff. Hang on, let me make sure I've got his Twitter handle right. Obviously, he's one of the team members at the Nest. So if you're interested in joining or if you've got any questions, you can grab a free trial below. You can find the details in the description for that. Or you can join up and get our call service as well for free just by using our referral link with Bybit. So let me just get you Bast's details. It is actually this, guys, right? So it's at Bast Trader. Yeah, so like I say, make sure to check him out. Make sure to check Razun out as well. In terms of volume, those guys are absolutely pumping out the hot stuff. And Bast's use of volume as support and resistance level is really, really super interesting. So what are we looking at on the shorter term scale? Well, like I said, if we're looking for what's kind of containing price in here, I'd be kind of favouring this price leg here. All right, so again, if this is making our dealing range. Also, guys, if you've got questions and bits and pieces on dealing ranges, I'm always happy to tell you my interpretation on them. I learned that side of things from ICT's original core membership many years ago. And I always recommend going to the source of these concepts, all right? For me, I use displacement legs or trading legs, meaning that I want to see liquidity taken out from some highs. Yeah, so for a dealing range, liquidity was taken out above there. Liquidity was also taken out below. That's an awful one. It was also taken out below there, right? So for me, this leg has significance, especially now that price is starting to make its way back up. We've taken out this high, meaning that on a 4-hour scale, we've now stepped into a bullish structure. Yeah. Why is that the case? Because we had the low here, higher low here, break of this high, which we can see here. Means that we now want to see this act as support for price to then move higher. Now, because this is our premium and discount range, I think I've done this the wrong way up to give this. Yeah, so let me just redraw that, just so it doesn't get too confusing for you guys. All right, so meaning that we're favouring long setups from down here, we're favouring short setups from here. So what I'd be looking at today is for price to potentially come up to this level. I'd like to see, a bit of a pump further up, in which case watching that high there, price does something like this, comes into this level. Yeah. If we then here start getting our early stage triggers to short, and then on the lower time frame, we see price come down. We want to see something like that and something where price initiates the move down within premium, meaning that shorts are favoured. And then on the lower time frames, we'd be looking for something like this. Yeah, we'd be looking for price to come up take out a high, come and close below the low that swept that high, yeah, and then in which case you can use that as an entry technique. That line, you can wait for a close below it, or one that I tend to favor more is you want to see displacement in this move that breaks structure, yeah, which I'll show you in a minute in some entry techniques, meaning that you see an energetic move that leaves a fair value gap, and then you can target that for your entries, or you can combine the two, right? And you can put, say, 50% here on what I call the breaker line, yeah, and then you can save another 50% of the trade for the retest, meaning that at least you've got half a position size if you don't get that move come back, okay? So a little bit similar to Bitcoin at the moment here. We've got levels here, here, and ultimately if we get above that one here, we're then looking up here. Now, it's not just all bearish, guys. If we come up here, yeah, we get above this and we start to hold, then I'm looking for basically the opposite, yeah, which is a run of some liquidity on the lows here for price to close above the high that swept the low. Yeah, that means the origin of the move that took liquidity. Then when price breaks out above, if we get that nice fair value gap in here, I'll be looking for the pullback to that and ultimately targeting longs into here. However, I would want to see this set up here, yeah, get a nice bit of confluence, because obviously it would mean trading against the premium discount range. All right. So for that, we'd need to see some key drivers. We'd want to have, in my opinion, some backup there as well from Bitcoin. And talking of which, just before I go on to some entry technique, guys, unless you've got any questions, in which case, please don't hesitate to put them in the chat. Let's take a very quick look at the DXY. This thing has been flirting around this diagonal for a while. Now, you'll notice that I don't use diagonals a lot. When I do, I really try and make sure that they're quite poignant. Again, someone I'd really look at for that are people like Trader SC, or maybe like Burb, who's amazing with those kind of things and patterns as well, but also Axel Kaibar, who's a CMT, very, very similar to Burb, and his use of patterns and his knowledge on it is just absolutely unparalleled. So what was interesting about this is when we line these levels up here, we can see how incredibly cleanly, yeah, they're interacting with these highs. So there's no cherry picking. Stop the market there, stop the market there, stop the market there. These things were all capping the upside. So then when we came back into it here, we had this deviation, right? Price came up, everyone thinking the dollar's going to show a lot more strength. Ultimately, swing failed these highs, broke down into these lows again, but did once again find support at our key support level, which is this one down here at 101.035. Now, while it held itself here, we saw this big reaction again into our slope resistance, but this time we impulse move above it, came down to retest this area, and now price has kind of moved higher. However, kind of concerned about it coming into contact with this high here. So the basic premise is that the DXY is often an indication of the market's risk appetite. It's a little bit trickier than that at the moment because there's a bit more context going into it in terms of when we look at obviously what's happening geopolitically, but not just in terms of the war in Ukraine, but also with the oil-rich nations looking to try and abandon the petrodollar, right, and get rid of the US dollar as the world's reserve currency. So that's basically more of an economical war that's taking place at the moment. So all of that has been leading into a lot of weakness in the dollar. Now, obviously, if we're trading this in FX, weakness in the dollar is good for the counter-traded pairs because we can target, say, Euro USD and then play strength in the euro. But for a long time now, we've been looking at this as a counter-correlation to Bitcoin. Yeah. So, for example, if we add the Bitcoin chart on here, actually, what I want to do is I want to get rid of this and then add it and overlay it. Why is it not doing that? Hang on, guys, because I can get this on the same chart. All right, let's just pop it in a new... No, we don't want to do that either, do we? So basically, what I'm trying to do here is get this chart overlaid onto here so that you can see the correlation, which it should be doing. but it's not. Interesting. But basically, what you would see if we add that on is you would see that if we make this bigger down here, then when DXY is going up, quite often Bitcoin is going down. And when you look at that correlation over time, if we maybe move this to a line chart, I don't know why this is being awkward today, but basically what you can do with this is, here we go. You want to get this data, right? And you want to get it on a cleaner pane than this, which is all to do with the percentage scale, which is a bit off today, which I'm not sure why. But basically, when you see price going up, on the DXY, you would often see the price coming down on risk assets. Bitcoin is a beta risk asset, meaning that it's obviously very high on the risk asset list. So it means that in times of prosperity, when people have disposable income, when people have got a bit more tolerance and a bit more appetite for risk, when the market conditions are better, when inflation's under control, when interest rates are settled, then people are willing to basically be more speculative with their money, right? And those kind of market conditions aren't really that present at the moment, right? There's a lot of uncertainty in the market. So while we see strength in the DXY here, we do still obviously show a little bit of caution towards Bitcoin. If we look at the same charts here, we can see, and let's just take this date here. So from the 5th of May, Bitcoin's been in this pretty much downward trajectory. If we then kind of take that information and then we look to overlay that with what we look for the same thing on DXY, if we go and look at the 5th of May on DXY, what you'll notice is that there would have been a lot more upwards momentum, which we can see here. Bear with me 1 second, my trading view is being a bit slow today. So here's the 5th, right here, Like we said, Bitcoin's been going down since the 5th, DXY's been going up. It's a nice way to kind of check that counter correlation between the two. And in terms of correlated assets, checking the traditional markets, which is our S&P 500. This is ES, which is the mini contract, which, as I said, as we were looking at this earlier in the month, is that this area here, if we want to see price continue to go up, we really want to see this hold. And we really haven't had any strong closes below it. And in fact, actually, look, the body's kind of respected that really well. And now we're starting to show strength again. So strength going into things like the S&P 500 normally means that there could be some disposable there to be put into Bitcoin as well. But we also need to remember that we saw this real kind of interesting point that when the faith really waned and went to the lower point recently, then money started flowing into Bitcoin, meaning that, maybe people are really starting to see that as some kind of pseudo store of wealth. However, like with anything, traditional markets will really dictate this. So let me just close up with a couple of, just to give you guys some context in terms of the entry techniques that I was discussing. So I'm going to put a thread out about this, but I thought we'll give a little kind of sneak preview and take a look at what I'm talking about. So I know the majority of you guys are slightly higher time frame traders. I personally really like to trade on execute on the 5 minute. I look for kind of these displacement models, which I'll show you on here, but just let me put my sessions back on. I'm very, very conscious of time in terms of when I'm trading these sessions. So what I'm typically looking for, let's move this back to a more traditional range. Oh no, actually, I'll leave it like that, right? So we can see here we get our premium discount, So if we're looking at this in terms of those principles and we're favoring our short players, we can see what happened here. Price ran up here on the 15 minute. We came out of London showing a lot of strength in London, meaning we get continuation. There's then a slightly higher chance that we're then going to reverse moving into the New York session, meaning that when we came into here, this blue session, this grey box and blue line, represent the areas that I'm really most interested in looking for my entry triggers, all right? So I'll look on here. I'll very often drop down to a 5 minute chart, which I can show you on here. Let me just move that so it's not so distracting. Now, whether you're trading the London session, the Asia session, the New York session, it's really, really important to have the context and understanding around the session that you're trading. Okay. So for me, what I'm looking to do is, as a short-term trader, as a day trader, I'm looking for reversals typically, meaning that I want to see price coming to a key level. And like I said, I use my B Pro for this a lot because in terms of the B Pro trailer, what it allows you to do is work within a bias. Yeah. So as we can see here, as we step in to the New York session, yeah, then I've got a couple of things that I can do here. If I was bearish here, I would be targeting the breakdowns of these levels. I'd be looking for price to run highs, break down into lows. If I'm bullish here in line with the trailer, yeah, then I'm looking for price to ultimately expand higher. And what we can see here is we stepped into New York. Yeah, we got this nice bullish reaction. We get a break in market structure here, allowing us to be buyers in here with a really nice clear liquidity target up above. Now, the other thing that I'm looking for though, are key runs on liquidity. So even if we forget the B Pro for a moment, which obviously really, really helps us out, we can see another good example of it here, which is a very clean example. This really aided in terms of the trade that we took to close out the week. We got a lovely short in there on Thursday, catching this move here down. Now, this is a very clean example though, because when we look at it, we've got our B Pro trailer bearish, right? We're already in a bearish bias here as well. What else are we looking for? We want to see a run on liquidity. Price is coming into this, yeah, right, into this fair value gap. Remember what I was discussing in terms of our premium and discount range, yeah? So we can see here, price is up here in premium, meaning that we're favoring shorts. So what do we want to see? We want to see liquidity run, yeah, which we can see here. See this move higher, yeah? What do we then want to see? We want to see the structure break, yeah, or at least a market structure shift. Then what do we want? We need to see a fair value gap or an order block, yeah, within our displacement range, meaning that when we take the 50% of this, I can only target targets that are in here. This is my strategy as well, guys, right? You know, been built off of ICT concepts over the years, things that I've studied and learned a lot over from SZ, from Burb, and a number of really amazing traders. But this is how I see it, right? I need an entry technique, which for me means I need to have an order block in here or a fair value gap. Once we get this breakdown, the important thing with this breakdown is we have to have displacement, right? Yakuza Kana, hey buddy, sorry I didn't see you sneak in there. So here's our displacement range. Why? Because this is the leg that shifts market structure. Yeah, this is when we're going from setting higher highs and higher lows. This impulse move down sets a lower low. The displacement that we get is this fair value gap that's left here, and this order block here, the last up candle before this move down, yeah, is sat in premium, meaning that we want to target this with our stops above here, and then we need to have clear targets below. So what are our clear targets below? Well, we have this low here, yeah, which is also in line with this interim low here, making it relative equal lows. So that would be a target for us here. And then the other area, when we have these big impulse moves higher, then what I'm really looking for is, okay, well, where are these last down candles sat in here? Yeah, and we can take the consecutive down candles here and say, okay, well, if this was really an order block, and if it was these down candles here, you can even take the one higher up if you want, or certainly move through the time frames to find the most suitable single block. Yeah, when we get that impulse move, again, leaving a fair value gap, when price comes back here, if there was strong buying power here, we expect that again when it gets to here. So in terms of our entry method, it's really nice and simple. We just need to make sure at this point that we're getting a good risk to reward. So as soon as price breaks this level here and we get the displacement, we take our range, we stop the range here. When we don't get the retrace, we take it down lower. When price then ultimately comes and interacts with that, we're then looking to take our stops just a little bit above this higher. And then what I want to see is ideally like a 1.4, 1.5R. We just get 1.4 here to this initial target. Yeah. Because what I'm looking to do here is I want to see how price reacts when we get down to here, because I'm going to look to move my stop loss to entry. Yeah. So the moment that we get into this level here, it stops to entry. And then when we hit the top, of our target, which is a 2.13R, I'm shutting out maybe 60, 70% of the trade there. Ultimately, price reverses, takes out our stop loss at entry, but we still make some nice money on the trade. Okay. So it's using the idea and the concept of time and technique as well to kind of laser in your focus on the charts for the day. So with that in mind, how can we overlay that on what we see today? So we can see we're currently holding a bullish trailer here on ETH. We want to just pop up just to a 15-minute very quickly. Now, remember on the higher time frames what we said? Yeah, we said this was that key level that we wanted to see flipped. Why? Because we had all the liquidity resting above these highs, swing fail there, purged back down to take out liquidity below these lows, and now we've had this big expansive move higher. So for me, while we're holding the trailer here, what would I like to see in New York? Well, I'd actually quite like to see price come down. So maybe we've got this low here, price comes down, sweeps this low, yeah, recovers back up, gets ourselves into a bullish structure, and then we could look for longs. Where would we look for longs into? Well, we've got this high here, if it hasn't been tapped, ultimately this one here, but realistically, this one here, and then our consolidation that we have here, which is what I'd look to draw across. BD, hey buddy, BTC tested the weekly 200. What do you think about that? Yeah, I think moving averages, especially the high time frame ones, are very, very good things to look at. So let me pop that on for you guys so that we can take a quick look at that as well on BTC. So I know that a lot of hedge funds, I know you see them used on Bloomberg and stuff like that a lot as well, these moving averages. So they are important. Like I say, I do pay more weight to the higher time frame MAs. And let me see if I still got this on here actually, or I might just have to add it anew. But basically, you can see, and I used to use them a lot for trend, right? So like I use the B Pro Trader now, you can use. Sorry, TradingView's being a little bit twitchy today for some reason. But like you see me use the trailer here, you can use them and even overlay them on a lower time frame chart to give you an idea of trend, right? Whether you should have a long bias, whether you should have a short bias. That's the key. Let me just reload this. I don't know why it's lost connection. So what I'll do is I'm going to add the 200 MA to this chart. All right, we're going to look at Bitcoin. Just change across from ETH. If TradingView wants to let me today, I'm really, really not sure what this is all about. No, really, really strong internet connection coming in. So I think TradingView might be having a bit of a meltdown. Hey, Jem, you legend. Just in time to just watch TradingView meltdown on me, mate. Okay, it's kicking itself back into gear now. So we're just going to take a really quick look at closing off here on the 200 weekly MA. But also, I think what can be quite a cool thing to do, which I'm not sure if everybody's aware of, and if you are, I'm not trying to teach you how to suck eggs, but it is a good thing to have on there. New ISP doing wonders. Yeah, exactly, mate. It's everything's been working really smoothly at the moment as well. I don't know where this kind of. I'm sure it's just a temporary glitch from them, maybe doing some kind of update or something. But it has just been horrific this morning. Right, there we go. So indicators. You can just go onto here, guys. Now I just use your typical MA, so moving average, trading view zone 1. And then you just need to go on here, pop onto your settings. All right. Like making it a nice like danger red color or something. And then on here, this is where you can get interesting. Obviously, you put this on here, so 200. Now, when you're going onto here, you can choose your time frame, right? So if you want it on chart, it means it's going to be on the chart that you select. So if we do that, right, and then we go on to a weekly, we can see what BD is talking about here. Let me just turn off my time-based lines here so that that's a little bit cleaner. No, you know why? Because we need to go on to a BTC USD index chart or the Coinbase one to get enough history on here to really look back. So, again, this is always something really important to remember as well, is that if you're trading, you're spot buying bits and pieces like that, it's really, really important to make sure that you've got as much data as possible. In terms of day trading, like I do, I'm using the exchange that I'm trading on, or which is either Bybit or Apex. And the reason for that is because I need that data to be real and real time for me, right? With this one, the reason that we didn't get the 200 weekly MA is because there just wasn't enough Bybit on the wasn't enough data, sorry, on the Bybit chart. So let's look at what this means here. We can see as we lost this here, we tried to recover it. We ultimately deviated this, came back down below, and then had to search out the liquidity below here. Sounds really, really familiar to what we were talking about in terms of the liquidity earlier, right? So I always find stuff like that super, super interesting. Now, we've come back above it. Notice how we found it as resistance here. Now we've pumped through it. So look at the parallels that we see here. It took this big impulse move here, this high volume bearish candle to come underneath before we then ultimately came back, retested this and sold off further. So what we want to see, or certainly what the bulls want to see here, is for this retest to be the catalyst and the proof that this has now been flipped from resistance to support, right? Now, if you want that time frame view of your moving average, because now when we move to a 4-hour chart, well, this represents the 4-hour MA. But if you want to see a weekly MA on this chart, you can go into your settings, change from chart to whatever time frame that you want. Yeah. So let's say we want the weekly on there. Then this represents the weekly 200 MA, right? So you've now got a 200 MA on the 4-hour chart or on whatever chart you switch onto. And that can sometimes be a nice way of keeping that kind of relevance on the chart, helping it keep you in tune with your bias, all right? And then something else you can do is change this to line with breaks. Yeah, and it makes it into these dots. Yeah, so it just makes it a little less, a little less obtrusive. So something that I know quite a lot of people pay attention to is like the daily 50. Yeah, so when we do that, we can see on our dotted lines here, if we're looking to trade lower time frames, what something like this can do is just help keep you in high probability bullish trades. Yeah. So look, all the time we've been holding this, even when we found support at it here, all of these days gone past, bullish opportunities, all of which come to the upside. Ultimately, it's going to fail and break down at some point, as it does here. We wait for the retest, we hold this. What's interesting here is we see how this was desperately, desperately offering support. Let me just turn it back into a line for you guys so it can just seem a bit clearer. Yeah, so found that, reclaimed it, retested it as support, sold up, into this order block over here, targeting these equal highs. Price broke down, support again. But can you see how it's just losing momentum coming into this? In, bounce, good bounce. Price action carries up. In, bounce, not very convincing, is it? Look at what happens. We get that retest, big impulse move higher. Retest here, there's just not a lot of momentum there. Ultimately, we lose it, retest it, sell off here. But one of the things I think is going to be interesting if we do move higher is whether we come back into these levels up here. So that's a really, really cool way of using that. And again, like BD mentions on there with your moving averages, with anything like that, always make sure you back test it and you make sure you've got a lot of data on it. All right. Otherwise, you just kind of end up getting a little bit of that recency bias. The impulse move in March 21 is after 21 weekly test. Yeah, exactly. So the first test of the weekly 21 and last week's 200 test, pretty bullish. Yeah, exactly. No, I can see definitely how that plays into your thinking of that. So what BD is saying here, let me just pop that back on and we'll just go to the weekly very quickly. Is if we just look at that. Yeah, and HM saying BTC price action isn't great. No, exactly. Price action isn't great at the moment, not really by any means, but it's it is one of those ones to go up. Retro Water, hey buddy, how you doing? I'm good, thank you, mate. Had a nice chilled weekend, and ready for another big week this week with the Nest fam. We set a big high bar last week with the trading, so we really want to get out and smash it and make May a really, really special month. So here we are. Okay, we're now on chart. Let's pop ourselves onto the weekly. So when we're looking at this in terms of our moving averages, right, we can see here we've reclaimed this nice retest. Historically, we can see as price goes all the way back to here, price was above this since December 2018. Small dip below it here. Ultimately, the rest of that price action was just monster upside moves, big flush out, another monster upside move to take out these highs here, ultimately coming back down below these lows, flushing out liquidity below here, and now ultimately just grinding lower and lower until we've had this nice little resurgence that we've seen in here. So, guys, again, nice point with the moving averages, not something I use tons of, but I do look at the high time frame moving averages. Jimmy, actually, your NLP coach, is someone that's very, very, very in tune with you using moving averages. So I'd recommend to check out his stuff as well, aside from the fact that he's also an absolutely immense psychologist with tons and tons of amazing videos out there on how you can help kind of condition your mindset to trading. So, guys, with that in mind, brings us to a nice kind of natural close for the session. We've just dipped into an hour. I know I wanted to keep this one shorter, and I never ever do. Let's just maybe take one last quick look at Kingfisher, and let's update those, and let's just see if there's any new information coming in on that front. At the moment, it looks like we're pretty much sitting 50-50, or maybe kind of slightly favouring the short liquidations, maybe for a little bit of a run further down. But ultimately, you want to see this information skewed a lot more, right? You want to see the one on this side massive and then the one on this side really small, or vice versa, in which case it can give you an indication of where the institutions can be looking to kind of push price up or down. All right. Nipar, you are more than welcome, my friend. I'll post some charts later as well to keep you guys updated with my thoughts as the day goes on. So do pop onto Twitter and have a look. Like I say, if you're interested in trading with myself and the team, you can find a link in the description below to join us through our calls only Bybit deal, which means you get access to the trading team's calls, which probably would have paid for 6 months of the membership alone just in the last week. So if you're interested in that, check it out. If the education is more your thing, then do come and join us on the free trial, and you can really benefit from seeing what the trading community is about, what the traders are like, the different type of traders you are, and see if it's for you. And if it's not, go with everyone's blessings. But look, have a fantastic week ahead, guys. I'm going to try and be nice and active this week, get some threads out for you guys on Twitter. We are going to be back on Wednesday. Going to do the alt request show as well. So if you've got them traditional market assets as well, HM, who's joined the stream as well, is a really, really good developing Forex trader. So I don't know if you've got any questions on that one on Wednesday. HM, pop on and maybe we'll take a look at some of the FX pairs as well. All right, guys, have a fantastic week ahead, everyone. Let's see how things play out. Do keep an eye on Twitter, and if you are interested, you can find information obviously in the link below. Wishing you all a fantastic week, and I'll see you all again on Wednesday.